Hello and welcome to the program. I am DEJI360 EPP. Now, in line with the federal government's plan to maintain the January to December budget cycle, President Muhammadu Buhari has again presented the 2022 appropriation bill tagged Budget of Economic Growth and Sustainability before the National Assembly. In the revised Medium-Term Expenditure Framework (MTEF) and Fiscal Strategy Paper (FSP) for the 2022 now to 2024, President Muhammadu Buhari jacked up the total expenditure of the federal government in the 2022 fiscal year to 16.45 trillion naira. But after working on Buhari's request, the Senate pegged the federal government's total expenditure at 16.39 trillion naira. So the 2022 budget has a proposed expenditure of 16.39 trillion, revenue of 10.1 trillion, which then leaves a deficit of 6.26 trillion. This is based on the parameters of an oil benchmark of $57 per barrel, exchange rate of 410 naira to the dollar, projected GDP growth rate of 4.2% and inflation rate at 13%. As expenditure now continues to surpass revenue, the country's debt profile keeps rising. Now, the over 6 trillion deficit in the 2022 budget is expected to be financed by new borrowings, and debt servicing is already taking up about 3.61 trillion naira in the new budget. That, for a lot of people, is a serious cause for worry. Joining me now to discuss this further is Professor Ken Ife, who is an economist. Thank you very much for joining us on the program. Let me quickly get your overall take now on the budget.
Oh, I think the budget is constructive. I think the budget is taking us out of the woods, and I think I can see light in the end of the tunnel with this budget. And it's easily the best of the budgets we've seen in recent times, because all the parameters, naira to naira, when you compare this year's budget and the one coming next year, naira to naira, is the 2022 budget is superior. You look at the benchmarks, they're better. $40 this year, $57 next year, and that's sustainable because you can see the rise is there is tension, and prices are going up, predicted by even the U.S. Information Agency. And production volumes have climbed from this year was 1.6, is now 1.88 projected for next year. And there's no reason why they wouldn't achieve that, because growth is returning. Global growth is returning. So there is higher demand for crude. And obviously, we still have some areas of concern on inflation, even though it's expected to go to 13, which is still around 17. Yeah, so we'll have to see how that goes.
And when you look at the fact that food inflation is still quite high, even though it's moderating, it's actually not coming down. It's still quite high. Then you still have the problem of insecurity in most of the food belts of the country. You think inflation can actually come down in 2022 to that
the costs figure? Of inflation are so many. There's so many things on our inflation, both demand pull and supply push, everything. There's too many things going on the inflation, but it's mainly, apart from insecurity, mainly around food, because the food sub-basket index has consistently maintained a gap of 4% or so for 3 years now. So we still need to continue to deal with that. And obviously, it's not far-fetched. We are feeding 300 million people, not 200 million people, because most of the Francophone countries are depending on Nigeria's agricultural production.
Now, what about the GDP growth rate, the projection there? You think that's realistic, or is it probably optimistic?
I think the economy is poised for growth, and the reason is this: in 2016, oil, the component of oil on our revenue was over 50%. And so when the collapse came, the oil dragged us into recession. And then it was when prices came back that oil brought us back out of recession. This time round, last year, oil plunged us into recession, but non-oil pulled us out of recession. And if you look at the figure, the oil revenue is 3.16 trillion.
Yes.
The non-oil tax is 2.13 trillion, and the independent revenue is 1.82 trillion. So if you add the two, they come to 3.95 trillion, which means that the oil has now dropped to about 43% of our government revenue, which is good news for us. It means that, and the more we push down the oil, the more resilient is the economy, because the shocks, those exogenous shocks on the oil, won't take us into recession. If oil is reduced to between 30 and 35% of the revenue, then it will not, any shock in there will not take us into recession anymore.
Now, the biggest talking point here is where actually the money is going to come from. I mean, it's one thing to prepare the budget. It's a different thing to get the money. So you look at those areas that the government says it expects the money to come from. Do you think it's things are feasible that would be able to raise? For instance, the government is hoping that the revenue, what it will have available, will be around 10.13 trillion naira. You think we'll be able to raise that much?
No, there is a split in that revenue. First of all, if you listen to the President of Senate, he said that the expectation of 400 billion from the state-owned enterprise as revenue shouldn't be 1 trillion. So there are more reasons to believe that we will get far more revenue because of this accelerated action being taken to boost the revenue, to move it from 6 to 8% to 15%, doubling it, effectively doubling it. And the reason is because they are revising the Fiscal Responsibility Act 2007.
Yes. And
they've gone very tough on the enforcement. Everything on the enforcement is about going to jail. This is outlawed. Local standard is also outlawed. Any individual can get the prerogative of a high court and start action against an MDA. You are not going to wait for penalty of an MDA. No, the individual that made the mistake or did the stealing is going in for it. So it's very, very tough, very, very tough. And at the same time, at some section of it, it tells you what will happen if you break the rules on borrowing. And they even warned the financial institutions that if they lend outside this framework, then the lending is unlawful. So there's so many things. They've tightened up significantly. They're out for the civil servants to make sure that they pay. And then first of all, under the Finance Act 2020, we have this cost to revenue, which is 50%. But beyond that, there is 80% of operating surplus that have to be retired to the Consolidated Revenue Fund. If you fail to do that every quarter, then they will actually clamp down on your revenue and take 25% from source. And that's already happening for some of the MDAs now. So there are good expectations that they will increase. And then on the case of the borrowing, they split it up. It's 5 trillion that they are looking to borrow, 50% foreign, 50% domestic. And there's privatization proceeds expected at about 90.73
billion naira.
Billion naira. It could be more. Then there is also drawdown on existing loans.
Yes.
In the period, they will draw down about 1.16 trillion in the existing period.
Yeah.
So that's how they plan to raise the 6.26 trillion naira deficit.
Okay, let's talk about what some people will call the elephant in the room and how to deal with that, the issue of the deficit. Deficit, of course, at 6.26 trillion. That's really huge. Even the president himself confirmed that it's beyond the threshold of the Fiscal Responsibility Act, and this time it's 3.39%, and the Fiscal Responsibility Act actually recommends it recommends 3%. So it's really huge. And of course, the government has made it clear that a substantial amount of that deficit now will be funded through borrowing. You look at the state of our debt status as we speak. I think in the region of around $86.6 billion. A lot of people are worried that borrowing more now to fund the budget in 2022 will just put the country in probably some kind of debt trap that it might find difficult to exit, because some people have argued that the issue here is that the government is not making enough revenue to be able to pay back this debt. And then you also look at how much the government is spending on debt servicing for 2022, over 3 trillion. All of that, help us to make sense of that and how things can actually add up.
For a start, the fiscal position is actually improving, because last year the debt to GDP ratio was 4.52%, and then they moved the 3% threshold upwards, and there were even the recommendation is actually going to be around 4%. The recommendation in the revised act. But be it as it may, we are now taking a much lower deficit this year, and that brings it down to 3.39%. And there are provisions in the law that allows the government to tinker with those ratios, especially when there are security situation and the extreme challenge on the fiscal challenge. So they are actually allowed to do those. Then in terms of the debt performance, there's also significant improvement. If you remember, in last year, 2019 or 2020, we finished up at about 83% debt service to revenue. And this year, the projection was to 46.8%. And then next year, in the new budget, it has been reduced significantly to about 33%. Just about 30, it's just less than 40%. That's the new debt to GDP ratio. So the fact of the matter is that we are trending down on those indicators. But as to whether the borrowing is necessary, of course it is necessary. We know that if we are facing existential problems, security in this country is an existential problem. COVID-19 is an existential problem. And we are not here to worship money. If you need to invest for your security and for well-being, then if you don't have the money, the savings, then you have no choice than to borrow. Of course, we don't have the savings, so that's the situation. But if you look at the international benchmark on borrowing, I think we're going to be around 23%, and it's about 40%.
So you would argue that Nigeria's debt is actually sustainable at the moment?
Is sustainable in the respect of all. There are two angles to this sustainability. There is whether, how much are you borrowing as a proportion of your GDP. GDP is the moving target. We are around 23. When you add the ways and means from central bank, it might be heading to 30. So that's fine. But it's still less than 40, and it's still less than 50, which World Bank sees at the size of our economy and the dynamics that we could actually do.
But I understand you. Sorry to interject. I understand it's still less than 30 or 40. I understand when you give these figures. But the problem is that you look at the capacity to pay back in terms of revenue. How sustainable is it?
Yeah, that's the side that the weakness is on that side. But I have just given you figures showing that the debt service to government revenue is improving. And then you've seen that the current petroleum oil act has actually pushed in another 2 trillion onto the revenue side. And then you've also seen package of measures being taken by government to double that revenue base, which they outlined them. A lot of it is to do with the MDAs, and then also capturing money as source. So there are lots of measures that they are rolling out. And in fact, they're also reviewing the biggest one, which is the concessions, the tax concessions and the waivers, because that is huge. So they are I'm glad they're reviewing those to up the revenue, and of course plugging some more leakages through the IPPIS and GIFMIS, and of course the TSA. So all of those measures are coming in handy to improve the prospect that we could get out of the woods. So I'm not in any way faced by all these assumptions and postulations that the country is facing fiscal stress. We're not facing any fiscal stress. Tell me how many countries. And look, if it's not even us that should judge, if the lenders feel that way, they wouldn't be lending money to you. Because they know that Nigeria is a resource-rich country. Nigeria has not defaulted one day on the payment. In 2005, when we raked up about $30 billion in debt, 40% of that debt were because of penalties for failing to pay on John. That is not the same today. And then you can't argue when the government is paying all the salaries. Nobody has now, maintained salaries even through all the COVID. They maintain the payments of pension and all of that. So you can't eat your cake and have it. You have a huge security challenge that requires a lot of money, and we are still managing. And we have to be a bit more realistic in our expectation. So we are getting there. I believe we are getting there, and I don't see any reason for panic.
Prof, before I let you go, there's something I want you to speak to. The truth is that, yes, it's true we have the federal budget, which of course we've been discussing, but we also have the budget of 36 states in this country. And the truth is that you look at it, Nigeria is not just about the federal government. I mean, we're talking about a country that has, if you like, 36 economies. So help us to understand how important the budgets of the various states are and how they can make the difference in turning the fortunes of Nigerians around. Because, Nigerians keep concentrating on the federal government. They concentrate on the federal budget. I mean, what does the federal government want to spend? 16.39. But come on, we still have the various states come up with their own budget. So how important is it for these various states to ensure that their budgets work and that they are well implemented so as to turn the fortunes of Nigerians around? Because what I always tell people is, look, what has the woman in a remote village in Zamfara State, for instance, got to do with the federal government or got to do with the president? The woman should be concentrating on probably the councillor or the local government chairman or probably the governor of her state.
Yeah, the states have to do more. Because if you look at one critical area, which is infrastructure, there are federal roads, federal infrastructure, yes, but the states need to connect to this infrastructure in a way that enables them to get closer to supporting businesses. Secondly, we have been criticized. We have been heavily criticized on very poor investment profile on the education and health. Now, these are in the residual list, not even in the concurrent list. They're in the residual list. And residual lists are for states. But yet, the federal government comes in, investing in those areas just to raise the game. And there are many examples where federal government is even outspending the state governments on health. And then in terms of education, federal is only concerned with of universities, and then states also played in those areas as well as private sector. So the states need to do more. The states are nearer to the businesses. So they are, if you look at the ease of doing business indicators on World Bank, you notice that the 4 key drivers of those are in the realm of the states. The ease of registering a business, ease of registering a title, ease of construction, getting construction permit, litigation on title, all of that, they are all to state responsibility. And then we'll continue to be ranked among the poorest in the world, simply because we can't get our states to up their game. So there are many areas. And when you talk about poverty reduction, I don't know how much the federal government has to do with poverty reduction, because they are farther away from those masses than the states and local government. So I think you are correct. They have to do more. If you look at agriculture, what business has federal government with agriculture? I can say it. Is he buying fertilizers and sharing it out to people? Is that the kind of investment you need from federal government in agriculture? It's the state that owns the land. It's the states that should organize and get more engagement. And look at the Anchor Borrowers Program the central bank has embarked on, giving loan to 3.7 million people, farming 4.6 million hectares, and then and disbursing nearly 780 billion. How much involvement are the states? Many of the states don't want to get involved in it. When you ask them, they say that they don't want to give a guarantee to farmers, and they walk away. The second thing they say is that they don't have ISPO window to guarantee the loan that they're taking. So, you should see them get involved. There are many ways they could get involved, because you can use your state land, because the states have so many estates, and then get the farmers, share it out 1 month per hectare, and then that draws down the loan without collateral from central bank. So there are many ways they can engage, but they are not. And they look at their budget should be minimum of 10% of their budget for agriculture. And when I look at many of them are below 2%. So I think they need to do more.
All right. Professor Kenife, thank you very much for joining us on the program, and thank you for sharing your thoughts with us.
Thank you for having me.
All right, we'll take a short break now, and we'll be right back. Stay with us. Don't go away.
Opinions are free. Facts are sacred. But truth is universal.
How, in practical terms, can we, for instance, de-escalate the tension?
President must see himself as the President of the Federal Republic.
We know where the enemy is. 3 places. The Lake Chad Basin, the border area between Nigeria and Cameroon, and then the Sambisa Forest.
On DEJI360, we give you a complete dose of everything. Opinion, facts, and undiluted truth.
I hardly believe what politicians say in this part of the world.
A new Nigeria is possible, a future is possible.
We delve into the issues, dissect it so that you can understand it, use it to take action.
I don't think there's any need for any governor to look for grant for ranching.
DEJI360, dissecting the issues.